Hello and good afternoon. Thank you to each and every one of you for tuning into this MEED live webinar on the Middle East and North Africa oil and gas projects market. We are live with you from the MEED office here in Dubai. My name is Indrajit Sen. I am the editor for oil and gas coverage with MEED. We are owned by London-based Global Data. And once again, thank you and a warm welcome to each and every one of you from whichever part of the world you have tuned into this webinar from. MEED, as you know, the main business is segmented into two divisions. There's MEED.com, which is the daily news analysis commentary service. We bring to you coverage of the main industrial segments in the Middle East and North Africa. Starting with oil and gas, construction, power, utilities, infrastructure, and related industries. We are, of course, supported by MEED Projects, which is an exhaustive database of projects. It's a projects tracking service that looks into each and every project in those sectors that I mentioned in the entire region. It's an exhaustive projects database. We have existed since 1957. And no one, frankly, does it like the way we do, as I'm sure you know already. And what a time to be discussing the oil and gas projects market in this region. Oil was trading at about $74 a barrel since the last time I checked. I think it was about 15 minutes ago. So quite a prolific time for oil and gas projects, and the operators are quite eager and willing to push through large, big-ticket projects, as you may be noticing in the last 12 to 18 months. Obviously, oil prices do act as a catalyst between the $70 and $75 range. And of course, along with conventional oil and gas projects, there's also sort of huge investments going into LNG as well. As you have been witnessing. And along with that, there is the unconventional programs, unconventional hydrocarbon programs, which are sort of making progress in countries like Saudi Arabia, even to some extent here in the UAE, Oman as well. And there is, of course, the new energy segments like carbon capture, utilization, and storage. Of course, there is low carbon hydrogen as well, and not to mention green hydrogen and green ammonia. Although in this webinar, we will only be talking about the hydrogen that is produced from the hydrocarbon molecule. So anything in the renewable energy segment is obviously covered separately by MEED. And obviously, we do host webinars and other live interactive sessions from time to time about the power and utilities industry. Now, today's webinar coincides with the launch of the Mena Oil and Gas 2025 report. The details are mentioned there on your screen. It's the team based out of India and us here in Dubai that have worked tirelessly for months to put together this report. It's a detailed assessment of the outlook for oil and gas and petrochemicals projects in the Middle East and North Africa. We produce this annually, once a year, and obviously this is the latest version that's come out, and this should really be that defining sort of guide for you to understand where the market stands, where it is headed for, and the sort of direction you and your company should be taking to make the most out of this very prolific and robust time in the regional oil and gas projects market. Now, if you use that coupon discount for today's webinar, made available exclusively for today's webinar using that QR code, you are entitled to a $600 discount. So do remember to scan that QR code for that additional discount. Right, and before I begin, there's also this invitation for the MENA Construction Summit. For those of you covering the construction market in this part of the world, we are hosting this huge event in Dubai on the 20th of November. So do register for it, and a warm welcome from the MEED team for you to attend this event. Right. So let's just begin by taking a look at contract awards in the MENA oil, gas, and chemicals projects market in the last 10 years. And you can really see that there is a varied level of investment in each year. If you remember the downturn that took place between 2015 and 17, you can really see the impact of that sort of slump in project investments in the years between 2015 and 2017. It started sort of picking up from 2018 onwards. And then, of course, the pandemic struck in 2021, although the figure for that year doesn't reflect the impact of the pandemic. That really was felt in the following year. And that is essentially because projects that were critical to oil and gas operators the planned projects that could not be awarded in 2020 got awarded in 2021, and hence you see that big spike in project capital expenditure. What is most interesting is that the region saw record spending last year as operators accelerated critical projects following the pandemic. So that was the recovery mode. But what is staggering is that the spending level for this year has already exceeded that level, right? So that is a staggering number. Close to about $98 billion worth of oil, gas, and chemical projects have been awarded so far this year. And let's also bear in mind that it's not. There are 2 more months to go, and a lot of project contracts are ideally awarded in the last quarter as well. There have been instances where contracts have been awarded on the last day of the year as well. So it'll be interesting to see how the remaining 2 months pan out. And to my mind, the total level of capex for 2024 could well exceed $100 billion. So that is quite a staggering figure, and just tells you where the market is really at this point in time. I do apologize for not mentioning earlier that this presentation will obviously be shared with you at the end of the presentation for every registered attendee. You will receive a copy of this presentation on your mailbox at the end of the presentation. And also about Q&As, obviously you're more than welcome to submit questions through the dialog box in Zoom. I can see questions have started pouring in already. Do allow me a little time to make progress with the presentation, and I shall give way to questions as and when I can. Right. We saw in the previous chart about the project capital expenditure every year. Now let's take a look at the project level of spending by country, and you can see all the MENA countries listed over there, and the different level of project spending that each country has done in the last 10 years. There's no surprise that as the largest economy and biggest oil producer, Saudi Arabia has dominated spending. Obviously, it commands an oil production level of 12 million barrels a day. It has set itself a target of attaining, or rather doubling its gas production level by the end of this decade. So obviously, even going forward, they are expected to maintain that level of spending. The UAE and Qatar are the second and third largest spenders, respectively. So this is project expenditure by country in the last 10 years. Right. And this is MENA oil and gas and chemical projects in different stages. And the chart on the left is the project spending pie for projects under execution. And the one on your right are planned projects. So every project starting from the pre-FEED and concept design stage to FEED, to main contract pre-qualification, to main contract tendering, to bid evaluation, and finally, anything prior to contract award is covered in the pre-execution stages. And those two pies ideally actually tell very different stories. So the value of gas projects under execution is considerably larger than oil and chemical projects. That's the pie chart on your left. And you can see 49% of all projects that have been awarded have been in the gas segment. However, when it comes to planned projects, the volume of oil and chemical projects overtake gas, indicating that the three segments are set to receive almost an even level of spending. So going forward, obviously, the capital expenditure by hydrocarbon producers are going to be more even. So you can see oil and chemical almost at the neck and neck level. Gas obviously will continue to command a big share of spending on projects going forward. Now, let me take a quick look on some of the questions that have come through. There's a question about a breakdown between oil and gas. Obviously, I think I've answered that question already. Going forward, as I dive more into the specific project areas and by country, I hope, will get a better understanding of the level of spending going in different sectors. There's another question about increasing push on curbing oil and gas investments. How is this trend peaking now? And what are the critical factors that lenders are looking into? The narrative out here in the Middle East and North Africa is very different to what we are witnessing in the wider global economy. Oil and gas, conventional oil and gas projects continue to make progress. The likes of Saudi Aramco, Qatar Energy, Adnoc, mainly the GCC oil and gas producers continue to invest big sums of money towards sort of advancing their long-term strategic goals. So the energy transition does have a bearing on the state of affairs in the Middle East and North Africa. But obviously, conventional energy projects, oil and gas and petrochemicals, are a big dominating sort of force in this part of the world. These figures are obviously in millions of dollars. I think that should be mentioned in each and every chart. Yes, for charts where the figures are in billions of dollars, it should be mentioned. Where it's millions, that should be mentioned as well. Right. I will come back to the questions. I think I've answered all that have appeared so far. Please keep them coming. I will come back to them eventually. Right. These are the major MENA projects under execution. So these are the top 20 projects where which have been awarded mainly in this decade since 2020. But also some of them were awarded in the previous decade as well, going as far back as 2017. So this is that chart of projects where you can see where the money has gone into in the last 4 to 5 years. And you can see that regional energy producers have spent tens of billions of dollars, actually, especially since the start of this decade, on oil and gas output capacity increase projects, with chemicals also being a key area of capital expenditure. The biggest contract that was awarded so far, and these are projects, of course, under execution, was one that was awarded in Iran. It's a $20 billion project that was awarded by the Pars Oil and Gas Company for the South Pars gas field pressure boosting project. And that is a staggering number of 20 billion on a single project. Back in 2021, of course, Qatar Energy LNG, they awarded the main EPC contract for the North Field East. Those 4 LNG trains that was awarded to a consortium of Chiyoda from Japan and French contractor Technip Energies. EPC is continuing as we speak. It was a $13 billion worth of EPC just on that one single package. Obviously, there were other sort of packages in the North Field East program. And then, of course, there was North Field South, for which the contract was awarded awarded in 2023. That was last year to Technip Energies, $10 billion worth of contract. And obviously, last year's, as we saw in the previous charts, last year's capital expenditure on oil and gas projects was obviously, Adnoc had a lion's share in that overall regional projects capex number through their Hail and Kasha program that was close to about $17 billion worth of contracts that were awarded in 2023. And $8.7 billion worth of one onshore package for the Hail and Ghasha program that was awarded to Italian contractor Tecnimont, and the offshore package was awarded to a consortium of NMDC Energy, the local Abu Dhabi contractor, and Italian contractor Saipem. I'm not going to go through the entire list. Obviously, like I mentioned, you will have this report at the conclusion of this webinar today, so you can go through them at your own time. But this is essentially an assortment of the biggest projects that were awarded and are under execution. Right, now let's take a look at the key performing oil and gas contractors, the companies that have won these tens of billion dollars that have been spent on oil and gas projects. And this is a chart of the top 20 contractors by volume of work under execution. Obviously, we do not consider projects that have been completed. This is essentially the order backlog based on work that is under execution. And you can really tell that Asian and European contractors are dominating the regional market, as they have for decades. But what is quite astounding is that Italy's Saipem is sort of eclipsing all others by virtue of a healthy order backlog it has built, mainly in this decade. So, I mean, essentially about $170 billion worth of projects under execution from the entire Middle East and North Africa, and that really is astounding. And obviously, they have won major contracts in Qatar, in Saudi Arabia. They are pushing for sort of key projects in Abu Dhabi as well, in other parts of the Middle East and North Africa, Egypt, Algeria, another very strong market for them. Hyundai Engineering and Construction from South Korea is at second spot, followed closely by Technip Energies. India's Larsen and Toubro Energy Hydrocarbons is not very far behind at fourth position. They are, if memory serves me right, they are at the moment the biggest offshore contractor in Saudi Arabia. LNG is, and they have won a raft of offshore EPCI contracts that we will take a closer look at later on in the presentation. American contractor McDermott is in fifth position. And you can see, like I mentioned, the chart is essentially dominated by Asian and European contractors, with, I suppose, NMDC Energy from Abu Dhabi, the only sort of local contractor that features in the top 20 list. Obviously, you may remember that they recently had an IPO of their shares on Abu Dhabi Stock Exchange. I was there for the bell ringing ceremony on September 10th, I think it was. So yeah, I mean, they really have outpaced other local contractors when it comes to project execution, and happen to be the only one in this top 20 list. Right. Let me take a quick look at questions. Could you please try to cover key hydrogen and energy transition projects? CCUS, yes, of course, like I mentioned, carbon capture, we will take a closer look at. However, when it comes to green hydrogen and energy transition projects, like I mentioned, that's covered in a different industry. And my colleague Jennifer Aguinaldo, whom some of you might know already, she is in charge of anything to do with renewable energy. For today's webinar, my remit, it's oil and gas projects market. So essentially, the entire hydrocarbon supply chain, starting from upstream, exploration, production, right until petrochemicals, is what we're going to talk about in the webinar today. Another question about renewable projects. I think I've tackled that already. Yes, I think there's a question about if the chart is based on country-wise data. You may have seen that I've broken it down as per country as well. And going forward, I have profiled the GCC countries, because obviously they are the biggest spenders. And it's worth taking a look at some of the projects and programs that they are advancing or have invested in. which contractors from Abu Dhabi? Like I mentioned, NMDC Energy is the Abu Dhabi government-owned contractor, and they are the only local contractor that is featured in the top 20 list. Right. Now, this is the list of major planned projects in MENA region. So like I mentioned, by planned, I mean projects that are in different pre-execution stages, right from the concept and pre-feed stage, right until contract award, or just before contract award. So essentially, as you can see, that every major energy company intends to push forward with projects seem critical to their strategic long-term goals in the second half of this year, as well as in 2025. These 2 months, let's not lose sight of the fact that the remainder of the last quarter of 2024 might also see major projects being awarded. And of course, 2025 promises to be quite a robust year for project investments in oil, gas, and chemicals in the MENA region. The largest planned project is from Algeria. It's the Sonatrach, and it's a joint venture of Sonatrach and the Nigerian state oil company, and it's the Trans-Saharan gas pipeline. Obviously, this project has been long delayed. I think it was announced quite a number of years ago. I think it was either 2017 or 18, when obviously there was this whole sort of dialogue between the African gas producers and the European Union about additional supplies of gas as Europe was looking to diversify. You would think that the Russia-Ukraine conflict would have accelerated progress in this project, because essentially this was providing that critical and very viable alternative for African gas to reach European shores via this pipeline. However, no notable progress has been made, but obviously in terms of value, this continues to be the biggest project in the Middle East or North Africa, biggest planned project, I should say. And hence it is right at the top over there. North Field West development by Qatar Energy, that's the second biggest project. It is estimated to have a value of $12 billion. This is essentially that third phase of the North Field LNG expansion program by Qatar Energy. And this is, again, adding another 2 LNG processing trains to the entire North Field LNG expansion program. There is a high probability that this project will see very rapid progress next year. Obviously, the sort of feed works are undergoing. The main contract pre-qualification has already begun. And obviously, given sort of the track record of Qatar Energy in terms of working with a select pool of contractors, you can imagine that the tendering process may not be very drawn out. They would be expected to make quite swift decisions. And the pattern has been to work with contractors that have been involved in the LNG sector in Qatar over the years. And it's not hard to guess that the likes of Chiyoda and Technip and Consolidated Contractors Company would be involved again in the North Field West development. So we will keep our eyes peeled for this one. Some major Iran projects have featured in the top 20 list. You can see there's the Shahid Ghassan Soleimani refinery. $11.5 billion is the estimated budget figure. Obviously, that, I mean, as with any other project in Iran, given the weight of Western sanctions on the country and the lack of foreign investment, they really have struggled to make progress with the key projects that they would want to advance. That is, I mean, they really suffer from this lack of financing. However, the biggest project, like we saw in one of the previous slides, was the the South Pass development that was awarded this year. So you never know, things might get better once the geopolitical tensions in between Iran and Israel come to an end. We might see a rebound of oil and gas project investments in Iran, hopefully in 2025. Egypt, again, some major projects in the petrochemical sector. surfacing. You can see the Alamein petrochemical complex. It's an $8.5 billion estimated project, $8.5 billion. There is the Suez petrochemical complex, again, $7.5 billion in the feed stage. Some other projects in Egypt. There is the Triangle and AOI petrochemical industry complex. I think it's also in the Suez Canal economic zone. In the study phase, this is obviously a third-party investor, so essentially foreign investment coming in the petrochemical sector in Egypt. Apart from that, there is the entire liquids to chemicals program in Saudi Arabia. Obviously, we will discuss this in a lot more detail later on in the presentation. Essentially four projects in this program. Although I'm aware that there has been recent news about this project sort of stalling. There was, I think, a news story by Bloomberg, although there has been no official confirmation from either Aramco or SABIC, the two main partners in this liquids to chemicals program. There is the second phase of TA'ZIZ here in Abu Dhabi, which is essentially the expansion of the upcoming sort of specialty chemicals and industrial chemicals zone that is underway and being developed out here in Ruwais Industrial City in Abu Dhabi. And of course, the also petrochemical project in Kuwait being led by KIPIC also gets featured in the top 20 list of planned projects. Three packages, about $4 billion is the value of the two main packages. There is a smaller utilities and offsites package, which is about $1.5 billion to my mind. But then again, this project again has seen some very slow progress over the years, and things are not looking quite good for the future of this project. However, you never know. Kuwait does tend to surprise you every now and then. And obviously with the entire change of leadership in the country and new direction for Kuwait Petroleum Corporation, this project may well see get fast-tracked next year. Right, before I make any more progress in the presentation, let's play a little game, if you may, and by which I mean a poll question. Let's get your opinion on which industry segment do you expect MENA energy producers to spend the most on until the end of 2025? Do you think it's going to be oil? Do you think it's going to be gas, which obviously includes LNG investments? Or do you think petrochemicals and chemicals will see the maximum capex going forward? Answers have started pouring in already. And I can see that, okay, based on 300 responses that I've received so far, which is a great sample size, about 53% of you have said that gas, including LNG, is expected to dominate spending. And I have to say, I can't agree more. Obviously, given the increased focus towards energy transition, and with the importance of gas in facilitating that energy transition, there is no surprise that gas and liquefied natural gas is going to dominate spending in this decade and certainly in the years to come. All right. Right. At this point, I think I will also take a quick look at some of the questions that have come through. Can you share the key contractors in the oil drilling segment? Unfortunately, we do not cover the drilling segment. Our focus is mainly on the EPC side of the oil and gas business. Drilling contractors is something that we do not cover. Again, there is another question about retail gas stations. That is something that is outside our remit. Are you able to share massive backlog of ongoing orders affecting the aftermarket potential for EPCs. Now, you did see in that list of top 20 contractors, the volume of the order backlog volume of each of the top 20 contractors. Hopefully that answers your question. Saudi's COTC in Ras Al project was recently cancelled. Well, like I mentioned, of course, there has been news, and the word on the grapevine is that it's not a priority project anymore, but that certainly doesn't mean that the entire program has been cancelled. And we will sort of determine the reasons why it might be too early to say it has been cancelled. And also, more importantly, there's no official confirmation from either Aramco or SABIC or the Saudi Energy Ministry regarding the same. All right, let's move on. Let's talk about the biggest oil and gas producer and the biggest spender in this part of the world. And by that, I mean Saudi Aramco. And we will take a look at what they intend to do, what they have been doing, and what they intend to do, essentially. Aramco's profits in the second quarter and first half of 2024 may have slid on a year-on-year basis, but that has not impacted the company's capital expenditure. Project spending, on the contrary, has spiked sharply. If you look at the second quarter, CapEx rose to 12.13 billion, and these are official figures published by Aramco for the second quarter financial results. Second quarter CapEx also increased from the first quarter, during which Aramco spent $10.83 billion. So really an incremental rise in project spending. In the first half of the year, the company's spending increased to $22.96 billion, almost $23 billion, compared to $19.2 billion in the same period of last year. Now, obviously, it is no surprise that Aramco has demonstrated robust capital expenditure so far this year on major projects that are critical to its strategic goals of maintaining oil production at 12 million barrels a day. Obviously, the target of raising maximum sustainable oil capacity to 13 million barrels a day was cancelled by the Saudi Energy Ministry. And at the time, there was a lot of anxiety in the market about what was going to come in terms of project investments. But Aramco has sort of silenced all those apprehensions about a potential slump in projects market. And especially in the offshore segment, they have awarded contracts almost at breakneck pace. And I think close to about $5 to $5.5 billion worth of contracts on offshore EPCI oil and gas projects have been awarded year to date. Raising gas production by 60% by 2030, with 2021 as its baseline, is also one of Aramco's targets. And hence we see billions of dollars spent just this year alone on gas projects. And obviously the liquids to chemicals program, where Aramco has a target of converting 4 million barrels of oil per day to high-value chemicals by the end of the decade. That is essentially the crux of the liquids to chemicals program. Aramco last year said that it expected its total capex for this year to be in the range of $48 to $58 billion. And it must be said that they have made good of this capital expenditure promise, as the first 7 to 8 months of the year have demonstrated, far from witnessing a slump this year. This may well turn out to be a record year for project spending by Aramco. And I remember getting on this phone call. It was a very hurriedly put together press conference to discuss the second quarter results of the year. And during which I happened to get a word with Mr. Amin Nasser, the president and CEO of Aramco, during which he said he expects the company to ramp up capex in the next 2 years as it strives to achieve its strategic 2030 goals. So no let-off in spending. And that is sort of the directive they have, or the mandate rather, that they have from the Saudi government as well. This CapEx guidance indicates that Aramco's spending boom on oil production, gas capacity expansion, and liquids to chemicals projects could extend into 2026. So at least 2 more years of robust capital expenditure by Aramco. Now, let's take a look at some of the programs and projects that they have invested in so far, starting with the offshore spending. Like I mentioned, I think it was 30th of January when the Saudi Energy Ministry announced that they had abandoned, or rather directed Aramco to abandon the program to increase oil production capacity from 12 million to 13 million barrels a day. Now, obviously, it did have a limited short-term impact in the fact that Aramco had to cancel the tendering process for at least 15 tenders involving EPCI structures at offshore oil and gas fields. Since that decision, however, Aramco has gone the other way. The energy giant has spent, like I said, close to about $5 billion year to date on offshore EPCI contracts, known in the Aramco ecosystem as contract release and purchase orders, CRPOs. Italian contractor Saipem has been the biggest beneficiary of this robust offshore spending by Aramco, winning all of the 5 or 6 CRPOs that have been awarded this year. And that we saw being reflected in the order backlog numbers, propelling them to the top spot in the MENA oil and gas contractors list. And that is, the rest is the contracts that they won. Saipem has won CRPO 143, 138, 132, and 139. And then a major $2 billion contract in the form of CRPO 127 that involves EPCI of topsides and jackets for wellhead platforms, a tying platform jacket and topside, rigid flow lines, submarine composite cables, and fiber optic cables at the Marjan field. Now, looking ahead, there is, like I said, there is no let-off in offshore spending. Aramco has to keep investing in the offshore oil and gas infrastructure to be able to maintain its oil and gas production rate. And looking ahead, there are 8 more CRPOs, which are under tendering as we speak, of which LTA Contractors have submitted bids for 3. There are 5 more. I think for one of those, it's close to $1 billion worth of contract. That is due to be submitted by the end of this month, if I remember correctly. 4 more are due to be submitted before the end of this year. And that essentially means that the EPCI contracts for those CRPOs could be awarded within the first quarter of next year. Right. Another massive program in Saudi Arabia. And this is Aramco essentially shouldering the program of the Saudi Energy Ministry's endeavor to increase gas supply to various industrial and household segments of the kingdom. And that is essentially the expansion, the 3rd expansion phase of the master gas system. On 30th of June, Aramco officially awarded 15 lump sum turnkey contracts for the MGS3 mega project worth about $8.8 billion. You can see the list of contractors that have won their respective packages. Kalpataru Projects International from India, one of the most successful contractors in the master gas system expansion. They won 3 packages. L&T, again, has won one of the packages. China Petroleum Engineering Construction has won package 1, whereas SEPCO from China has won package 2. So the first 2 packages are essentially the gas processing and compression packages, whereas the rest of the packages are essentially the pipeline construction packages. And you can see that have included the project map application and the various routes that the master gas system expansion will take place in. Now, going forward, there are, like I mentioned, 17 EPC packages. Contracts were awarded for 15 of the 17 packages. Packages 9 and 16, which were originally part of the tendering process, were later then carved out as separate tenders by Aramco. Contractors submitted bids for both packages earlier this year. The big news is that both those packages have also been awarded. Package 9 has been awarded to Netherlands-based AHAC, whereas Turkish contractor Techfin has won back at 16. So essentially, the contract award process for the entire master gas system expansion has now been completed. And you could imagine that with the award of packages 9 and 16, that $8.8 billion worth of capex on the MGS3 program may have gone well past $10 billion. And this is essentially capital expenditure on a single project. Right. We spoke about gas and its importance to Aramco in line with the target that they've been set for 2030, which is increasing gas production capacity, or rather doubling gas production capacity by the end of the decade. What has Aramco done so far to this effect? They awarded contracts on 30th of June for the second Jafurah expansion phase. I think there was a question from somebody about the Jafurah expansion program. Here it is. $12.4 billion worth of EPC contracts and contracts for drilling services were awarded back in June for the second Jafurah expansion phase. And Aramco really has not stopped since awarding EPC contracts for the Jafurah second expansion phase. Within weeks of those 16 contracts that were awarded for phase 2, a consortium of Técnicas Reunidas from Spain and China Sinopec announced that Aramco had selected them for EPC works on the third expansion phase, which is worth about $2.24 billion. We recently published a news story on MEED.com saying that even EPC works have now kicked off on the third expansion phase, which essentially covers building of 3 gas compression plants, each capable of processing 200 million cubic feet per day of gas. Also in July, Aramco issued the main EPC tender for the 4th expansion phase. So really going at breakneck pace over here, because Jafurah is that massive unconventional gas reserve, which Aramco wants to exploit to the maximum capacity to be able to increase their gas production. That's this massive reservoir of unconventional gas. And apart from the Jafurah expansion, obviously the bidding process is underway for the 4th expansion phase. I believe bids are due to be submitted by the end of this month, although that could be extended further, the bid submission deadline. But away from the Jafurah expansion phase, in April, Aramco awarded $7.7 billion worth of EPC contracts for a project to expand the Fadhili gas plant in the Eastern Province. The project is expected to increase the plant's processing capacity from 2.5 billion cubic feet per day to 4 billion cubic feet per day. So just those 2 projects itself combine for a total of about $18 to $19 billion. And going forward, Aramco is expected to pursue other projects this year to boost the gas processing potential of its key plants, such as Harad, Shedgum, and Uthmaniyah. Right. Much talked about and now slightly controversial since the Bloomberg news story broke about the potential cancellation of this program. Might I just repeat myself by saying that there has been no official confirmation from either Aramco or SABIC about the future or destiny of this program. So till then, we will consider this project and this entire program to be alive and kicking. And obviously, this is one of those programs which, frankly, is too big to fail for Saudi Arabia. And why is that? Because when completed, the liquids to chemicals program will make Saudi Arabia one of the world's largest petrochemical producers. So a goal that I don't expect Saudi Arabia to just give up like that. Aramco, along with SABIC, have been tasked with establishing 10 to 11 large mixed feed crackers by 2030. So it's not just a program that covers Saudi Arabia, but wherever Aramco is present, wherever they have a petrochemical footprint, mainly in Asia and countries like China and Malaysia, and potential investments in India as well. All of that will come under the ambit of the liquids to chemicals program. And the total capital expenditure budget that Aramco has been set is $100 billion. this, of course, covers, like I mentioned, projects across their global petrochemicals portfolio, and not just in Saudi Arabia. But obviously, there have been 4 projects that have been earmarked for investment within the kingdom that is going to command the lion's share of that $100 billion budget. What are those 4 projects? I think there was a question about which are the feed and project management consultants for the liquid chemicals program. Well, here is the answer. Aramco selected KBR, Technip Energies, Wood Group, and Worley to provide PMC services, project management consultancy services, for the 4 projects, which are essentially Project East, Project West, Project X, and Project RTC. In a nutshell, what are these projects? So these projects, the first one, Project East, is essentially converting the Aramco Jubail Refinery Company, SASREF, as we commonly know, in Jubail, into an integrated refinery and petrochemicals complex, by adding a mixed feed cracker, so an integration program. Project West is, again, conversion of the Yanbu Aramco Sinopec refinery in Yanbu into an integrated complex. For these projects, obviously, for the Yanbu project, for YASREF, Aramco has got investments from China Petroleum and Chemical Corporation, Sinopec, so that is going to be a joint project. So that's, in a way, de-risking the project. If you have a foreign partner to come and invest, that obviously goes a long way in securing the financial health of your project. China's Rongsheng Petrochemical Company is a co-investor in the SASREF Integrated Refining and Petrochemicals Complex. The third project is the Saudi Aramco Mobile Refinery Company, or SAMREF. And again, that is converting the SAMREF refinery in Yanbu into an integrated complex. And the last project, which really is that beating heart of the liquids to chemicals program, is the crude oil to chemicals complex in Ras Al Khair in the Eastern Province. And SABIC is a partner along with Aramco for this project. SABIC obviously is, being a subsidiary of Aramco, involved in the entire liquids to chemicals program. But for this project specifically, it's a formal joint venture between Aramco and SABIC for the Ras Al Khair project. Now, you may remember that the Ras Al Khair project has had several start-stop moments in the past, namely in terms of shifting of locations. Initially, it was supposed to be in Jubail. Then it was, I think it was in 2021 during the pandemic, when there was news about the project moving to Yanbu on the west coast. And then, of course, there was news again quite recently about the project being relocated to Ras Al Khair along the Gulf Coast in the Eastern Province. Aramco has initiated a separate tendering process for the feed services on this project. And some of those contracts, I mean, this is assuming that the project is going ahead as per the original schedule. If the feed is awarded between now and the first quarter of next year, then you could expect EPC contracts for these 4 projects and the various packages that they would comprise to be awarded in 2025. And that could really push chemical investments, not just in Saudi Arabia, but for the overall region, to a record high. Right. The next big customer and for contractors in this region is Abu Dhabi National Oil Company, Adnoc. I'm not going to go into detail about who and what Adnoc is. Obviously, most of you have day-to-day sort of interactions with Adnoc. But the number to take away from this slide is essentially the $150 billion that Aramco was set, the budget figure that they had been set by their board of directors for the 2023 to 27 period. What is also worth mentioning is that Adnoc is striving to meet their 5 million barrels per day oil production goal. To meet that goal by 2027, it was initially set for 2030, but that was moved forward in that board meeting in November 2022. And virtually every Adnoc group subsidiary, namely Adnoc Offshore, Adnoc Onshore, Adnoc Gas have been set, specific projects to meet their share of that P5 program. And most of those projects are in different stages of planning and execution. And away from oil and gas production, Adnoc has also been set a carbon capture and storage capacity target of 10 million tons per year by 2030. And that is quite a remarkable number for a national oil company anywhere in the world. That 10 million tons a year of CO2 capture, and then, of course, attaining net zero emissions by 2045 and reaching zero methane emissions by 2030. Those are very ambitious targets and really demonstrates Adnoc's environmental sustainability commitments. Let's take a quick look at some of the Adnoc projects that have come onto the fore. And the biggest project of last year, and in fact of all time, is the Hail and Ghasha program, for which Adnoc invested close to about $17 billion worth of contracts which were awarded exactly 1 year ago. Like I mentioned, Abu Dhabi's NMDC Energy and Saipem was awarded the offshore package worth $8.2 billion. And Saipem later declared its share to be $4.1 billion. The onshore contract was awarded to Technimont. And apart from the regular gas processing and transmission facilities for the onshore scope of work, it also includes a CO2 and sulfur recovery and handling aspect in the onshore scope of work. And this investment represents the largest ever capital expenditure on a single oil and gas project in the UAE, and is a giant leap for the country in its goal of becoming self-sufficient in gas. And as EPC execution of this massive Hail and Ghasha project goes ahead, that is having sort of a quite a significant trickle-down effect in the form of subcontracts and orders for long lead items and other procurement activities. That is having a very galvanizing effect on the wider Abu Dhabi and UAE economy, which is great news for the local economy. Now, the Ruwais LNG Terminal, this is really Adnoc taking a shot at becoming one of the foremost LNG producers and exporters in the Middle East and North Africa region. The upcoming LNG export terminal will have the capacity to produce 9.6 million tons a year of LNG from 2 processing trains. And the full EPC contract was awarded in June last year. The contract was awarded to Technip Energies, a consortium of Technip, JGC Corporation, and NMDC Energy, worth $5.5 billion. EPC execution of this project is currently underway. And the complex will feature process units, storage tanks, export jetty for loading cargoes and LNG bunkering, as well as utilities, flare handling systems, and associated buildings. For the success of any LNG project, offtake agreements are really important, and Adnoc has paid special attention towards securing LNG offtake agreements with customers from all around the world, and has also secured investments, equity stake investments, from the likes of BP, Mitsui, TotalEnergies from France, for investment into the Ruwais LNG Terminal project. Offshore continues to be a major spending area for Adnoc, majorly led by Adnoc Offshore, and especially the Upper Zakum program, for which Adnoc and its partner Jodco and ExxonMobil from America has set aside a total budget of $30 billion that I think was announced back in 2019. And we are witnessing parts of that budget being spent on various projects to increase the productivity of the Upper Zakum oil field development. In April, Adnoc Offshore awarded the EPC contract worth $825 million for the UZ 1.2 MMBD project, the first phase of that project, to Target Engineering and Construction Company, who are based out of Abu Dhabi. The second phase of that user 1.2 MMBD project is currently under bid evaluation. The technical bids were submitted by 14th of August, and commercial bids were submitted just a couple of weeks ago. Lower Zakum is also a key area of focus. Various projects have been initiated by Adnoc Offshore to, again, increase the, or rather maintain the long-term oil production potential of this asset. A small project known as the Lower Zakum Early Production Scheme 2 and the Proved Developed Producing Project that was awarded to NMDC Energy, and contractors are now preparing bids for the first phase of the Lower Zakum long-term development program. Separately, Shef offshore field continues to receive investment from Adnoc as well. The second expansion phase of the Shef offshore field is currently underway, and the pre-qualification process for that feed was completed a few months ago, and I believe consultants are now waiting for the main feed tender to be issued for the Shef LCDP2 project. And separately, you may have seen this news being published in MEED about a $2 billion contract for a project known as the Shef Accelerated Development Project, which is due to be awarded, and McDermott International from America is in line to win this contract. I do not believe the contract's been officially awarded, but definitely a matter of time. And finally, I touched upon TA'ZIZ briefly. This essentially is in line with the UAE government's, specifically the Abu Dhabi government's, of diversifying the energy value chain and stretching it into the highly segment that's high in demand, which is the chemicals, specialty chemicals, organic, inorganic chemicals. And that is essentially diversifying the energy value chain into the non-oil segment as well. And the first phase of the TA'ZIZ program being developed in Ruwais Industrial City has made remarkable progress in the first sort of 9 to 10 months of this year. Essentially, there are 7 projects in the first phase. There is a blue ammonia facility which has been undertaken by Fertiglobe, South Korea's GS Energy, and Japan's Mitsui & Company, who awarded the main EPC contract for that blue ammonia project to Tecnimont. Separately, TA'ZIZ and Switzerland-based Proman are developing a methanol project, and bids for which have been submitted. Commercial bids have been submitted as well fairly recently for that project. And separately, feed contracts for a cluster of 3 chemical plants which will produce ethylene dichloride, chloralkali, and polyvinyl chloride have been awarded. ThyssenKrupp has won the feed contract for the first 2 projects, while Technip has won the feed contract for the PVC facilities. You may remember that India's Reliance Industries was a co-investor in this project, but they have now been replaced by France-based Chem1. And following the first phase, I mean, these are projects essentially in the first phase of the TA'ZIZ industrial chemical zone. There is also a planned second phase, which may include, again, it's still very early days, but may include a mixed feed cracker that is planned to be developed as part of TA'ZIZ phase 2. And MEED recently reported about a contract being awarded for the marine facilities and the export sort of infrastructure project for TA'ZIZ, known as Project Landing, as some of you might know. That, we believe, has been awarded to Rotary Engineering from Singapore. The contract value is, of course, unknown, but word is that the project has been awarded. The main investor for Project Landing is Advario, a Netherlands-based marine jetty and infrastructure developer. Right. Now, I will talk about Qatar Energy and then have a final round of Q&A, because in the interest of time, we will have to cut short the other slides that I prepared. But obviously, like I mentioned, this presentation will be shared with you, and you can go through them in detail in your own time. And I really have tried to cover the other GCC clients, namely OQ Group from Oman, Kuwait Petroleum Corporation from Kuwait, and Bapco Energies from Bahrain. But let's take a quick look at where Qatar Energy is with the LNG program. This is that massive LNG expansion program that was launched in 2017. Initially, the target was to raise the LNG production capacity of Qatar from 77.5 million tons a year to 126 million tons a year. And we know that contracts for North Field East and North Field South, the first two phases of the LNG expansion program, were awarded. Going forward, that project, I mean, just in February this year, that target was revised and upgraded to 142 million tons a year by 2030, and that is to be achieved through the North Field West development, North Field West project. And like I mentioned, there is a high probability that the EPC contract for that project may well be awarded next year. Offshore projects continue to dominate spending in Qatar as well. McDermott was recently, you may have seen the news about McDermott's recent contract award, estimated at $1.5 billion, which was awarded just a couple of weeks ago for EPCI of pipelines and cables at the North Field South development. Essentially, this project is part of the North Field South sort of development. And the contract scope of work covers EPCI of almost 250 kilometers of offshore and onshore gas pipelines. And the crux of the project is connecting these 5 new offshore wellhead platforms to the 2 onshore LNG trains that are part of the North Field South program. Obviously, producing LNG at such great capacities, each train is going to be processing about 8 million tons a year of LNG. That requires a significant amount of gas to be provided as feedstock, and hence Qatar Energy, in parallel with the LNG trains projects, have also had to launch projects, rather invest in projects, to sort of increase gas production from the North Field Reserve. And the contract that was awarded to McDermott is essentially part of that North Field offshore aspect of the energy program. McDermott has previously registered success with North Field South as well. They have won the contract for EPC of topsides and pipelines for the North Field South scheme as well. So it's not the first contract that they've won with the Qatar Energy project. Similarly, there is a separate project called the North Field Production Sustainability Project, the essence of which is, again, maintaining gas production to be able to feed the LNG expansion program. I mean, to be able to match the feedstock requirements of the LNG expansion program. Saipem essentially has dominated sort of the EPCI contract wins in the North Field expansion program. They won the entire first phase of the NFPS program back in 2021, and just in September, they won a $4 billion EPCI contract for the NFPS second phase. That package is essentially a combined package known as Comp 3A and Comp 3B, and the value, like I mentioned, is $4 billion, and that again sort of contributes to their large order backlog, which has pushed them to the top spot in the MENA contractors list. Like I mentioned, there are slides on OQ Group from Oman, Kuwait Petroleum Corporation, and there is a list of the top 20 planned projects in Kuwait. It's a very fascinating market. Kuwait really has impressed, has continued to impress, but has also found itself mired in political deadlock. But thankfully, with the sort of elevation of new emir earlier this year, a lot of the political infighting has been put to one side, and KPC and its subsidiary companies have been tasked with sort of accelerating stalled projects and obviously making progress with new ones. Kuwait too has very high ambitions of increasing their oil production, sort of becoming self-sufficient in gas, looking to invest in new energies, and you may well see contracts for some of those projects to be awarded next year and in 2026. Right. At the end of the presentation, there's just time for another poll question, and I would really like to pick your brains on what, according to you, do you think is the biggest challenge when it comes to execution of projects in the MENA region? Is it, do you think, shortage of skilled labor, difficulty in procuring key equipment and items, or is it non-payment and contractual issues with clients? Let's hear you out. Very interesting responses received so far. It's quite, really is a mixed bag of opinion there. And I've received more than 200 responses again, which really indicates what the key issue is. And that is non-payment and contractual issue with clients. Well, essentially, that has been a very chronic problem, not just with the oil and gas industry in this part of the world, but also with industries like construction. Obviously, things have improved dramatically over the years, but I do hear you that non-payment and sort of contractual violations continue to remain a major issue. The shortage of skilled labor has come up as the second biggest problem. Obviously, like we have discussed at length, with this amount of projects and the volume of projects that are going to be that are actually going forward and are set to come or be launched in the months and years to follow, labor is going to be a tricky sort of issue to address for both the project operators as well as for the contractors. But hopefully there should be an influx of skilled workers in this part of the world for executing some of the projects. Thank you very much for your responses. And finally, there's a slide about BAPCO. You can go through that in your own time. Finally, just a gentle reminder about the MENA Oil and Gas 2025 report that I mentioned right at the start. If you use the QR code, you are entitled to a $600 discount, being a participant of today's webinar. And another reminder about this MENA Construction Summit that MEED is going to host in Dubai on the 20th of November. I'm sure your account managers and the marketing team will be able to provide you with more information about this conference that is about to take place next month. So do not hesitate to get in touch. And with that, I thank you very much for your time. You've been a very patient and discerning audience. I apologize if I haven't been able to tackle all your questions, but here are my contact details. Do reach out to me as and when you feel, and I shall look forward to have a very healthy and engaging interaction with you. Obviously, there is ADIPEC taking place next month, and I do hope to see some or most of you that have attended today's webinar in person in Abu Dhabi next month. Thank you very much for your time and wishing you all the best with your business. Thank you.